Good evening, guys, and welcome to this session. So today we are going to be talking about a very important topic, which is called supply and demand. Okay, please, if you haven't gone through the previous lesson, which is dealing ranges, you should please try to revise it first before you come to this lesson, okay, so that it shouldn't disturb you, or it should not be too hard for you to understand. So our topic today is going to be supply and demand. Let me put that on the chart, supply and demand. We have supply and demand. Supply and demand. Okay. So this is going to be our topic today, supply and demand in Forex trading. So what is supply and demand? This is simply just a concept, and it's very easy to understand, okay? Because normally people might feel like it's economics and so on, but it's something very easy to understand. I'm going to explain it much practically so that you get it very easily. All right, so let's start. What is supply and demand? Now, supply and demand simply means it's with supply. Supply simply um explains the availability of something, or yeah, the availability of something, okay, like the supply of something, that is the presence of something in a quantity, okay. And then when we talk about demand now here is that's in the need for something, the need for a particular thing, okay. Now that's just a way of explaining it. But now when it comes to Forex, when they're talking about supply here, supply simply means there are they are talking about sellers, okay. They're talking about sellers. And then when they talk about demand here, they're simply talking about buyers. All right, so for you to understand it well, when they're talking about supply, we are talking about sellers, okay. And then when they're talking about demand, they are talking about buyers. All right, they are talking about buyers in the market. So these people here are opposite to each other. If if they are talking about the supply zone, they are talking about sellers. And if they're talking about the demand zone, they're talking about buyers. Now, which means that when you go to your chart, they're actually going to be an area or a spot on your chart where you call it a supply zone, okay. Now, if you should have a particular portion on your chart where it's called a supply zone, all right, where it's called a supply zone, what does this mean? This means that in this particular house, okay, in this particular house, only people who are willing to sell a particular stocks are there in this house. You understand now? All right, and then you have another house, and then in this particular house, it is called a demand. All right, the demand zone. Now, this demand zone here means that only buyers are present in this particular house, okay. Now, if you notice the way I've drawn the two houses, you will notice that the demand house is actually more than this one. Now, let's say we are in a battle, okay. Let's say we are in a battle, and the inhabitants of the demand wants to fight that of the supply. Now, just with the structure of this, you understand that these people are likely going to win the battle, right? Because they're actually more than the supply. So which means that if the supply is actually standing, let's say they are pushing something up, okay. Let's say they are pushing a car up, all right. Let's say supply is trying to push a car up, okay, and now demand doesn't actually want that to happen, all right. Demand, or let's say demand is actually pushing a car up, all right. Demand is pushing a car up in a hill like this, and supply does not actually want that to happen. So what will supply do in this case? Remember that the demand here is we have a lot of crowd, okay, like you can see in the building, and then supply here, it's actually a small number of people. So even though supply will stand here to like repair or to push back the house down, these people will likely continue pushing the house up because this number here is not enough. All right, it's not actually enough. But what if the number was enough? Okay, this will mean that these people push back the house down. So what this means is when supply is greater than demand, what happens? A currency pair will start to drop. All right. will be dropping. The prices of that currency pair is going to drop. It is not normal. If you go to the market and you discover that the prices of something, okay, that like the availability of a particular thing in the market is so much, right? The prices will start to drop, which means that the supply of that particular thing in the market is too much. Let's say you go to the market and you see that watermelons are just like, there are millions of watermelons, right, in the market. What will happen is that you discover that the price will drop drastically. If one watermelon was 500, then at this time now it might be like 150, 200, right? Because it is too much in the market, and the people that are selling, they have to sell it at a cheaper rate so that they will get rid of the stock. Now, but what if you go to the very market and you discover that they're just like 1,000 watermelons? Meanwhile, there are like 10,000 people who need it. Definitely, the people that are selling, the prices is going to increase. Now, what does this mean? This means that at this point, the supply for this particular watermelon is small, but the demand is too high. Okay, so when the demand is too high, like we have a big house for a demand, it pushes the prices up. Okay, you're going to push the price of the watermelon up. But now, what if the supply was too high and the demand was low? The supply is going to push the prices down. Okay, it is as simple as that. It is as simple as that. So we are going to be looking at it now on the chart. Let me explain again with a diagram. Now, like I said, you have a chart like this. A chart does not move on a straight line. A chart does not move on a straight line, which means that this is an uptrend. Okay, if this is an uptrend, price is making higher highs and higher lows. So anytime that price is pushing up like this indicates that there are enough buyers in the market. There are enough buyers in the market pushing prices up. Now, which means that this zone here, okay, the last point where it reverses, that swing low is going to be called a demand zone. All right, that's where buyers came in to buy that stock and then it started going up. So we are going to call the zone a demand zone. This is going to be a demand zone. All right, and then this again is going to be a demand zone, and this is again is going to be a demand zone. All right, this is how it is all. It's going to keep repeating. Any point where you see price starts to rally up heavily, all right, it starts to rally up heavily, breaking structures and forming new ones. Okay, that's where the origin of that particular move is called a demand zone. All right, now you will tell me that, okay, this should be a supply zone. Yes, this is actually a supply zone, but it's not going to be strong. Why? Because the market is in an uptrend. Okay, this is actually a supply zone, but the sellers that are sitting in this zone, they are not more than the buyers that are sitting here. You understand? So the buyers here that are going to take control, right? They're going to keep on pushing prices, even though we have a supply zone here, but it is a weak supply zone because prices is in an uptrend. Okay, let's give an illustration of a downtrend as well. We have a market making lower highs, right? The market is making lower highs and lower lows, lower highs, lower lows, lower highs, lower lows, until the downtrend is over, and then the market starts making higher highs, higher lows, higher highs. Now, this is the scenario of a downtrend, and this is a scenario for an uptrend. So with a downtrend, we identify supply zones. All right, remember I say when the supply of something is high, what happens is that it is going to push the price of the asset down. Okay, so we are having a supply zone at this point. That's our supply zone. Now, every swing high here, every swing lower high is a supply zone. Every swing high here is a supply zone. Every swing high here is actually a supply zone. All right, every swing high that breaks a low is actually a supply zone. Okay, what does this mean? This means that at this point, sellers came into the market, they added positions, right? They came into the market, they added positions to continue the downtrend. So sellers are sitting here. That's why it's called a supply zone. They push prices down, broke this low. Sellers came in again here, they entered again, they broke this low. Sellers, that is, they keep selling, they keep selling, they keep selling until now the prices become too small in a way that Remember we said you don't sell low, right? So it became too small in a way that they cannot sell low again. And what happened? I told you that you have to buy low, right? Now buyers came into the market. All right. When you notice that price has broken a structure, it means that buyers have come in to the field, right? So we are now having a demand zone has not been formed, right? Now, why has a demand zone been formed here? Why did I not put this as a demand zone? This is actually not a demand zone, but there are buy orders here, but there are opposing a downtrend. And they are not enough. All right. The buy orders were not enough to break structure here, like it did here. Okay, when this demand zone went up and broke its high, this means that a full potential of buyers have come into the market, and now the demand for this asset is more than the supply. That's why you're having now a break of structure. What is going to happen now is that you are going to continue seeing demand zones being created. Okay, you're going to see demand zones being created and respected. All right, price will keep respecting demand zones now and going up, breaking supply zones. Okay, price is going to be breaking supply zones. Okay, now remember I said this is actually a supply zone. All right, this is actually a supply zone, but why is price breaking out of the supply zone? This is because first and foremost, we are in an uptrend. As we are in an uptrend, the demand is more than the supply. All right, the little sellers that are here, let's say we might be having like 10,000 sellers here, but meanwhile the buyers here are like 1 million. All right, so these people here, they are not going to be able to support this price. They are not going to be able to resist price from not going up. All right, but first and foremost, when you are in an uptrend, a supply zone will not hold price to push it down. You understand? So demand zones will have to be breaking highs, and then just like that till the uptrend will go up till it expires, and then now starts to break a low, which means that sellers have now come in. This is a cycle. Okay, it will keep repeating like this until now. At this point here, before this downtrend, we're having an uptrend. Okay, before the downtrend, we're having an uptrend. What happened is that at this point, okay, at this point here, supply became more than the demand, and then it started to break structure down. It started to break a structure. Okay, so this supply, the sellers that came in here were really much until they had to break this demand zone. This demand zone here. All right. So at this point, we now believe that supply has taken over the market. Supply has taken over the market. And what you'll be doing, you'll be waiting to sell on a supply zone. So you always want to wait for price to come to a supply zone before you sell. All right. You always want to wait for price to come to a supply zone before you sell, which means that if price should form like this, if you should see price break a high like this, then what you have to do is you mark out your supply zone. Okay, it's not a line. You use a rectangle. You try to mark it out. It's a zone. Okay, it's a zone. I'm not talking about a candle, which is called an order block inside the supply zone. So I'm talking about a zone, which means the last candles that formed this swing low here is called the supply zone. The last candles that formed this swing low will be called a supply zone. So that's our supply zone right here. And then what you want to do is wait at this particular point to buy. I mean, this is our demand zone, demand zone, because we're on an uptrend, right? That's our demand zone. So you wait for price to come back to this demand zone, and what will happen? You buy from there. When you buy, then you expect prices to continue going up, all right? It is that simple. It is that simple. It's not complicated. It's not complicated. Now, it is the same thing with the supply zone. When the market creates a low, like a high like this, and breaks this low, what you should do is you mark out your swing high. All right, you mark out the supply zone from here. What will happen is price will come back up to this point and you sell. Now, what is the secret behind this point? Remember, I said it is where orders are being placed. All right, it's like a house where only a particular type of traders are sitting there. Like when I say supply zone, it's a house where sellers are sitting. You understand? It's a house where sellers are sitting and they are ready to sell when price comes up to that particular zone again. I hope that's really clear, right? It's a zone where sellers are sitting, expecting price to come back up to it and they sell from it. Okay. Why are they selling here? It's actually high, right? Remember, I said you don't sell low and you don't buy high. Okay. So they're actually expecting price to come back right up to the range high, to the premium level, which is a supply zone, and they sell from that particular point. As we are going, if you have a question, you can ask on the chat. I will get it sorted out. Okay. Any confusion that you have in the course of my explanation, you can always leave it on the chat box and I'll answer that for you. So this is simply the illustrations of this thing. Now we'll go to the chart. We'll try to see if we're going to see some examples on the chart. Okay, let's see if we're going to see some examples on the chart. All right. Now let's go and to look for a very beautiful example that we're going to use to illustrate. Now you will notice that the market does not move on a straight line. The market never moves on a straight line. The market always moves on zigzag form, okay? Your market will not just be moving so straight like this, straight up. No, no, no. It doesn't happen like that. Okay? It doesn't happen like that. You can see the nature of the market. It's always moving zigzag, moving zigzag, moving zigzag, moving zigzag. Now, this is an example here. All right, price was like in an uptrend and then we broke structure here to the downside. We broke structure here to the downside. And then what happened? Price rallied back up to the premium level and then it gave us at an area of a supply. Now, somebody might have been waiting for price to come up right up to this point. But remember I said at this supply zone, there is a candle that we call another block, all right, that we are going to talk about it in our next class. But you need to understand that this is a zone of supply. Where price started to sell, it's just like a zone of supply. But we are going to go deeper into the zone to now notice the particular point where price will likely reverse from a supply zone. Okay, from a supply zone. Now again, this is another example here. Price, before price started to sell, it went back up to the supply zone. And now before price started to buy, all right, it came back down to a demand zone. And when it was going back up, you can notice that price kept respecting the demand zones here, and then it was pushing right up. Okay. The swing high that was formed before price started dropping. All right, that's supposed to be your supply or demand zone. Now, there are rules to marking your supply or demand zones. Okay, there are rules to marking your supply and demand zones. Like I said, for a supply zone to be valid, it must break structure like this. There should be a break of structure like this. For a supply zone to be valid, it must break a structure down. Okay, I'm trying to keep this as simple as possible so that you understand it. Okay, I'm not taking it too hard or too advanced so that you will be I want it to be very simple so that you can understand clearly. Now, the first rule is that price should break structure. And the second rule is that the way price should move to break that structure should be with long candles like this, right? It should be very clean move with some long candles, like you see huge candles like this type, all right? So which means that what is this? From here, before when price broke this structure, this way we had a break of structure, right? Now, the move that started to break that structure was from here. So this is our demand zone. That's our demand zone right here. So we are expecting price, when price comes back to this point, we'll be expecting price to buy from that particular point. Okay. Now you keep on marking your supply and demand zones. Remember I said any zone, a zone that breaks structure, right? Like for example, this one right here gave us a break of structure. This was a break of structure, right? Now this is another break of structure right here. But now this broke structure here, where did the move started? We had this and then it went up to break structure. What should you do next? You should mark the swing low that went to give you that break of structure, all right, which is this zone. And what happened? Price came back to it and then bought. When it bought again, what happened? It had to break another structure. When it broke another structure, what are you going to do next? You have to mark out that swing point that gave you that break of structure, right? Remember I said it's the swing point, okay? The candles responsible for that swing point, it's a supply or a demand level. I'm not talking about other blocks yet, all right? I'm trying to make you understand we are talking about a swing point, which is mostly formed by 3 or 4 candles or more. Okay, so which means that as you're marking your supply zones, you're trying to like mark a swing low like this. Okay, that was formed. That was where the orders came in. We are globalizing, we are talking about a zone. Okay, now when we'll be talking about other blocks now, like marking a single candle like this, we are not going to be talking about zones again. We are going to be talking about a single candle. Okay. So when you have a break of structure, that's what you should be expecting. What happened here again? Price went up and then break a structure here. That's the first rule, right? And then you see that the break of structure was solved with just even two healthy candles went to break the structure. So what happened? You mark your swing low when price came back to it, and then it started going back up. Okay, let's see if we're going to see more examples again. Okay, now this is another one here. You notice that price came right down here, breaking structure. Okay, we had a break of structure here. Now that's the first rule. What is the second rule? The movement to break that structure should be with long candles. Okay, and now what do? You mark out where the swing high that formed, that started that move, okay, which was this one, then you extend it to the right. You can see how price came back to it and then it's sold off. So which means that this particular zone, sellers are sitting in this area to sell. All right, so when price comes back to it, they are going to engage selling, and that's where you should be selling as well. You'll now understand. So let's try to see if we're going to see some more examples. Let me check yes, check Euro USD. Okay. So let's check G. So when we're in the downtrend ended, all right, and then what happened? Price started to break structure to the upside. This was a break of structure, all right. Where's the swing low that went to break this structure? This is a swing low at this point. So price came back down to that swing low and then we went up again. So this here again is another supply zone because what? It broke structure and it had some clean candles. So whenever price should come back to this point, we're going to be expecting a good buy from this level. Okay, we're going to be expecting a buy from that zone. So that's how you do your analysis. You look for areas where buyers are sitting or sellers are sitting, and you wait for price to come back to it, and then you engage. It is as simple as that. When price breaks structure, you shift your focus, right? Because now what happened? This is supposed to be a demand zone, but now price about breaking the low. All right, when price breaks this low, now you now start looking at supply zones, because now at that point you are no more in an uptrend, you are now in a downtrend. So you should now start looking at the opposite direction. Okay, you should not be expecting the demand zones to continue holding price when you have started seeing a break of structure. It is simple with this illustration again like this. If you are in an uptrend and then price starts to fall on a downtrend, you should not expect these demand zones to continue to hold price to push price up. Why? Because price is already in a downtrend. So which means that though price is falling, price might just have a small reaction and then it continue going down until the downtrend is over. When the downtrend now is over, you should not be expecting demand zones to continue holding price to the downside again. No, price at this point now will just give us a reaction, continue to go up like that, like that, like that. All right. I don't know if you guys have questions. So with this demand and supply zone, it's just like a basic introduction, and then we're going to, when we start looking at it from other blocks perspective, you are going to understand much better. All right, you are going to understand much better.